All right, you're looking at a daily chart of the Nasdaq. Welcome to my daily review. For those of you who were looking for a real nice pullback, maybe to the 21, you were disappointed today as the index bounced off its 10. It had a nice 3-day pullback with volume, though, and it certainly could pull back further back to the 21 EMA, but it did bounce off the 10 EMA today. And if you look at the weekly chart, I mean, this thing has ramped for 8 straight weeks here. 2 months of gains, and this week, this is your pullback. It looks like a little speckle, and it's only down, 59 points this week. So, yeah, it's not much of a pullback, folks. I don't know. I don't know what to say. I mean, it could pull back further. It could just ramp higher. That could be it. So anyway, we just take things one day at a time and one stock at a time. I do not trade the index. Apple, congrats to the Apple longs here. This is pretty similar to the Nasdaq, where it pulled back to its 10 and then bounced today to a new high. It does not have a new market cap high. It has a new price high because they've been buying so many shares back that it needs, a higher price with the fewer shares. But congrats to the longs there. Couple stocks that I want to take a look at, go a little different route. Today is Tidewater. Some people are asking me to review Tidewater, and this has been consolidating in a base for like 4 months. And these guys provide offshore support vessels, for the wind turbines in the ocean. And so this field and services stock traded below its 50 and regained. It recaptured all of its moving averages. This looks really constructive. It looks really good to me. I would not wait for the standard buy point of 51. Probably get in above that high right there, 49.32. This looks really good, and the volume here the last few days has been above average. OII is another one in that group, and this is not quite as strong as Tidewater, but this one, again, it's recaptured its moving averages and trading sideways, and looks okay. If you want, something in this area, want to diversify a little bit. This is Core Laboratories, another one in that oil and gas field services group. Looks pretty similar as it regained its moving averages. Actually went up towards a new high and then pulled back and had an inside day today. But these stocks look constructive. They've consolidated for 4 months, and I'm just keeping my eye on them, just trying to keep an open mind. And I'm going to move on to something I'm more familiar with, which is retail and Elf Beauty. This stock made a new high yesterday at 113.38, and today came within a nickel of it, 113.33, and is just showing strength here. If you're going to own a cosmetic stock, Elf Beauty is the one to own. And if you're going to own a beverage stock, Celsius is the one to own. This one upgraded at Wed Bullish this morning. Wedbush Securities with the, I don't know, 175 price target or something. It doesn't really matter. The only thing that matters is it bounced off its 10 EMA and was up 5% with above average volume today. So Celsius looks strong. COCO, Vita Coco actually has outperformed Celsius in the last year. And this one bounced off its 10 EMA as well and was up 6% with above average volume as well. So the beverage stocks are doing well. And we know over the history of, the stock market, the beverage stocks have done well. Over time, Pepsi, Coca-Cola, Hanson Natural, which is now Monster. So don't discount that group just because it's a drink. The drink stocks have performed well, many of them over the years. This is NVDA. If you're going to own a semiconductor stock, this is the one to own. You got to own the leaders, right? And this one just flat on the session today. It was down a lot in pre-market. Thought it was going to have a rough session, but it just traded flat as buyers stepped in. AMD, this one was trading, like I had mentioned, in the box, and it fell out of the box yesterday and followed through to the downside today. This one does not look good after trading at 130. Now it's pulled back to its closed this gap here. AMD had a gap at 110.99, and today it closed it as low as 109.85. So who knows? Maybe it'll come back to its 50. Maybe it'll return to its pivot point right there, where we'd gotten in a while back, in a couple places here, 88 and 102. But anyway, AMD, it's just like I say, if you're going to own a semiconductor, just own NVIDIA. You got to own the best. If you want to own the hardware, best hardware, you got to own Supermicro. I want to show a weekly chart of this because this to me looks like a high tide flag here. There's your pole, and then it's just flagging out now. Just give it a couple more, days or weeks to flag out, and maybe that could do something special. I would not give up on that one. I know some people say, "Oh, it's changed its trajectory." It's a rate of ascent. As you can see, it was ascending like this, and all of a sudden it just goes like that. So the trajectory changed. But to me, I think it's still it hasn't topped, and it's got a ways to go. But time will tell. I could be wrong. I've been wrong before many times. If you're going to own a cybersecurity stock, you got to own Palo Alto Networks. In the software space, this is my favorite one. It made an all-time high today. And, is CrowdStrike doing that? No. Is Zscaler? No. Fortinet? No. Only Palo Alto Networks. There's your CrowdStrike. There's your Fortinet, which I like, but it's not making highs like Palo Alto Network. I really do like this weekly chart. It's going to take some time, but Palo Alto Network is the king in this space. And so if you want a cybersecurity stock, you got to buy that one. HubSpot, stick with the leaders, folks. You can buy anything you want. You don't have to buy anything. But if you want to buy a leader, that's the leader. HubSpot, this one here traded down to its 21. You got to go to the weekly. I know I'm bad with these, but you got to go to weekly charts, folks, before you do anything. This one had a 3 weeks tight pattern, and it's pulled back this week a little bit with the Nasdaq, but it bounced off its 21 EMA today, and it's definitely one to watch. You can see the breakout after earnings, and then it just ran into profit zone. You should be taking some profits here, but with that 3 weeks tight pattern, it could be an add-on buy point. MDB, Mongo Bongo, this one had what did it have today? Oh, it had a news of the partnership with Google. You can see a big ramp after earnings, formed this little shelf, bounced off its 10 EMA, more than 4% today with the announcement with the partnership with Google at its investor day. And this is Monday. This stock is doing nothing wrong. I actually like the way it's trading. It traded down to its 21 and popped 3% today. But if you look at the weekly, you can see this stage 1 base here, and it really ran hard up the right side of the base. So it needs time to have the moving averages catch up and then shake some fools out before it ramps higher. So don't be the fool. I really like that stock. The home builders, I'm just going to go through this one, just the perfunctory review of stocks making new highs. SDR Horton making a new high. Pulte Home, this one making a new high, just trending higher with moving averages. Nothing to do there, but just watch it go higher. MTH, Meritage, this one was on our watch list, had an inside day. Today was just flat. And then the builder, the king of this space, and this one pulled back today a little bit as well. Just riding its moving averages higher. The last group I'm going to look at today, the biotechs. I mentioned the high tight flag, rare pattern here. You can see the pole. 144% gain. There's your pole. There's your flag. And now it ramps higher. Maybe SMCI will do something similar. We're just going to have to wait and see. Time will tell. EXAS, this one had good news yesterday and then sold off. And then bounced off its 21. And then today had an inside day. It was up, 6% and had an inside day. That shows you how much it sold off yesterday. It opened up higher, then pulled back to its moving average. And that one looks good. AXSM is my last biotech stock I'm going to cover. This one, they reported strong revenue growth. Forward guidance is really strong. This is definitely a buyout candidate. You can see this stage 2 consolidation, and it's just pushing away from that base there. And the train is leaving the station. Better catch it. Anyway, that's all I have for today. We never give up.